So basically today I'll be short chance. I hope you guys are good. And you guys are having a wonderful weekend. Today what I'm gonna be doing, I'm gonna be actually showing you guys how to analyze. Even though I haven't analyzed in quite a very long time for you guys, but then that doesn't mean that I haven't been trading. So as much I haven't been available, I hope you guys have been trading as well, you know. So today I just wanna talk about minor things. So basically, what we're going to be talking about, we're going to be focusing on two things. Okay, we're going to be focusing on two things. First of all, we're going to be focusing on how to analyze indices for short term. Okay, for short term, and then as well as for short term, and then as well as analyzing how to analyze indices, indices for long term. But then basically, guys, one thing that you have to know about this is that analyzing indices for long term, it has to go with you actually having the money to actually hold your trades. Okay, so basically what I'm trying to say is that you cannot trade indices for long term with probably let me just say 2000. It wouldn't work. The reason why it wouldn't work, it's because whenever like you analyzing for long term, basically what you have to do the during that time, you actually have to use a bigger time frame. Okay, so basically now, as you guys know, whenever like I'm analyzing for short term, I start from the weekly, and then I go to the daily, and then I go to the what is it called, then I go to the H4. But then with all guys, if now you want to analyze for long term, that means all guys won't have to actually use the H4 anymore. You'll be starting from the daily, and then from you'll be starting from the monthly, and then going all the way to the daily time frame, so that you can be able to find your entries. Okay, I feel like guys, with all of this, I feel like it's one of the same thing. Basically the first thing that you have to do is identify the trend. Identify the trend. Identify the trend. That's number one. Then number two, after identifying your trend, you actually have to draw your trend lines. In this case, I'm not going to say trend lines, but then I'm going to call it diagonal support and resistance. Diagonal support and resistance. In this case, it might be easier for you, or you might feel like it's easier for you to actually use a channel. Okay, but then in some indices, a channel wouldn't be preferable. Doesn't being the market doesn't move in a correlation. Basically, when I say in a correlation, it means that the market doesn't move in this certain shape of a channel. But then when it comes to Nasdaq, USDT, those two actually they follow what you call guys, when basically you were doing what is it called, if like you did mathematics, you'll know that we have something that we call a gradient. They move in a certain way that allows the market to actually form a channel, of which the diagonal support and the diagonal resistance, they have the same gradient. Okay, but then if now you're going to be analyzing something as basically T and what's called Nikkei, those are two different things. In that case, you end up having sort of a wedge. Okay, so basically you just have to identify the trend, because I feel like in order for you to trade anything, you need the trend. You need to understand where in the trend am I, before you can even execute trades. If basically you're just going to go in a chart and start buying and selling, it's not going to work. You have to know which trend you're at, whether I'm on an uptrend, whether I'm on a downtrend, and how do you identify that? Okay, guys, I'm going to show you. So it's basically identifying the trend, drawing your diagonal support and resistance, and then another thing, it's drawing. Okay, basically you're gonna be drawing horizontal lines where the market trend turned and created a huge move. Basically, all of this, I'm still gonna show you guys how to deal with this. I'm still gonna draw on this. Okay, and then after you're done with this, obviously this is gonna be on your bigger time frames, the time frame that you usually start from. In this case, for short term, I would advise all guys to start from the weekly time frame. That's where you're gonna be drawing what? That's where you're gonna be drawing your horizontal lines where the market turned and created a huge created huge moves. Okay. Then the last one, last but not least, whew, that's you drawing your pivot points. Pivot points. What's a pivot point? Let's start there. What's a pivot point? A pivot point is a line whereby like the market has been respecting it for a very long time. That line is previously acted as a resistance, previously acted as a support, and now either acting as a support or resistance. In a manner, the manner that I'm actually talking about, it's when like basically you have a line. Let me just say for instance you have a line. Okay. Let me say I have a line there. And let me say previously, what we saw the market actually doing, the market actually went up, came back down. Okay. Let's say basically, I don't think this will work. Let me try to find something else. Okay. What I'm actually talking about, I'm talking about something like this. Let's say, for instance, the market actually went up. Where's this now? I can't even see it. It's fine. Let me just draw. Let's say previous the market actually went up. Okay. Came back. That line acted as a resistance. It came back as a support. I mean, then came back acted as a resistance, and then went up, acted as a support, went up, acted as a resistance. You get me? So basically now, if like the market is here, obviously you're gonna expect the market to shoot up. So when I'm talking about a pivot point, I'm talking about this line that actually has what? I'm talking about this line that actually has so many touches on it, and the market was respecting all those touches. You get me? That's the best way to explain this. That's a pivot point. Okay. That's a pivot point. Okay, now, so these are gonna be all. Okay. So yeah, when it comes to pivot points, what you can see happening is in most cases, you see here with a pivot point, sometimes we can also have what we call a pivot zone. When I'm talking about a pivot zone, I'm actually talking about a zone, okay, just in the form of a line that has so many touches, but in this case, you're not going to be using a line, you're going to be using a zone. You get me? So basically, let's start. I feel like this is going to be the same thing as that, because even here, even like you translate this, still the same thing. So let me just erase here. Just that when you go to your when you go to your bigger time frames, you're gonna be applying this on a bigger time frame. Okay, let me just erase that. Let me erase it. Let me erase that. Eraser. Okay. So basically, what am I talking about? Let me just try to draw. Let me just use the other side to draw. So basically, I'm just gonna be using this side. So basically, let's say okay, obviously now you know that the market. Let's say the market was on an uptrend. Okay, let's say the market was on an uptrend. Okay, let's say the market was on an uptrend. I'm trying to draw this. It doesn't make sense to me. Okay, just remove it. Just use my drawing tools, the one that I draw instead of a line. So basically, let's say the market was on an uptrend. And how do you see that the market is on an uptrend? The market is creating higher highs and higher lows. That's how you see that the market is on an uptrend. Let's say we have a market like this. That's like this. How do you see that the market is on an uptrend? What you can see is that here we have a lower low with lower high. Then we have a lower high. No, it's a higher low. These things get confusing. The higher low. We also have a higher low. We also have higher low, and we also have what? We also have a higher low. And then on the other hand, we have what? We have high highs. High highs, high highs, highs, high. You get me? So basically, this is an uptrend. Without even using a trend line, you can probably see that this is an uptrend. And in most cases, people confuse this. How do they confuse this? You see this low is actually higher than that low, and this low is actually higher than that low, and this low is actually higher than that low. If like you're a trend line trader, I'm not saying that I'm not. I'm also a trend line trader. I respect trend lines, but then I respect trend lines in a manner that actually works in my direction. It actually helps me instead of going against me again. If you're a trend line trader, the moment it breaks this trend line, you would be looking for selling opportunities, of which you were gonna eat for that moment, but then the market was gonna reverse and come back on top of the trend line. Then you were gonna ask yourself, what actually happened? The market hasn't changed direction because now it has broken the trend line, because the market hasn't actually broken below the previous lower higher low. You get me? So sometimes learning about these things and knowing where to actually take your trades is very important. So number one is identifying your trend line. You're identifying your trend. Of which in this case, in my case, I would say the market is on what? I would say the market is on an uptrend. Doesn't bang, I'm seeing higher lows that are higher than the previous higher lows. Okay. Now you must draw your diagonal support and resistance. Now drawing your diagonal support and resistance, it actually goes with you. Actually what I do, let me just use this. I'm gonna use a different color for this. You draw in your diagonal support and resistance. You basically have you choose the first touch and the second touch. I don't know if you understand me. What I'm trying to say is that let's say the market actually started this trend here. What are you gonna be using? You're gonna be using the first touch and the second touch. That's the best rules to actually make sure that you actually draw trend lines that actually make sense. Rather than you starting your trend line here and drawing it like this, it's not gonna work. Or drawing it like that, it's not gonna work. You get me? Because this is your second touch and this is your, I don't know, I mean, it's 1, 2, 3, 4, 5. This is your fifth touch. So it was not gonna work. You basically have to use the first touch where the trend actually started and the second touch, no matter what. Okay, you get me? So what I'm gonna do, I've already identified the trend. The market is on uptrend. Now I'm identifying my diagonal support and resistance. And then this one, how do you do it? First touch and the second touch. And the reason why I'm drawing it like this and not like this, you have to understand, is because the market wouldn't give me, would the market would have actually broken. You see, here we were gonna have something where like the market actually broke, and that's not what we're actually looking for. So the way I was gonna draw it, I was gonna draw it like this, basically, like that. Simple as that. I now have my diagonal what? Now if you can look at this, now in this case, because now the market was on an uptrend, that's gonna be my what? In this case here, I have my, in this case here, I have my diagonal what? Diagonal support. And here what do I have? I have my diagonal resistance. No, with all guys, I've shared so many knowledge. I've shared so much knowledge that now I've only realized now that if now we combine all that knowledge and you actually form one thing, you can go far when it comes to trading indices. Because I've shared the different candles in a trend. Basically in an impulsive move, that different candle is gonna be acting as a what? As a supply and demand. I've shared a lot of knowledge with all guys to using Fibonacci retracement. I've shared a lot of things to candle feelings. I've shared quite a lot of things with all guys. So if now you combine all that knowledge and don't forget some, now it becomes something where like you can make up something you can combine and actually create a system that actually works. So but then now, nonetheless, when we go to the chat, I'm gonna be applying all that knowledge that I've taught you guys. Okay. And create a system for you guys. Okay, now we're drawing the horizontal lines where market tend. Okay, basically now in this case, what you have to do, basically, Okay, in this case, obviously now that's how you're gonna draw it. You're just gonna draw something like this. Okay, what you can do is instead of drawing a line, you might even consider using a zone. You might even consider using a zone, something like this. Basically, in this case, I was gonna be concentrating on this higher high there. Draw a zone, draw a zone, draw a zone, or draw a line. Doesn't matter. Line, zone, one of the same thing. Like that, like that, like that, like that. Okay. Or can you just use lines? Doesn't matter. It doesn't matter at all. Me, I'm just drawing this because now I have, you know, that's how I actually draw it. But then it doesn't matter how you actually draw it. So now, you can just draw that. Now with this thing, what's actually happening here is, most people actually confuse this. When the market is actually moving like this, it's moving like this. What you can expect always as a trader is that once the market actually touches the upper diagonal resistance, it's going to come back all the way down to the diagonal support before going to diagonal resistance. Unless something actually happens and then it causes the market to actually what? Change in trends. You get me? So now, as a trader, what do you do? How do you find those interests? What happens here is, since you know that, okay, now the market, since when it touches the upper resistance, diagonal resistance up, it's going to come back to touch the diagonal support. In this case, you as a trader use what you call major inner trend lines. These major inner trend lines, they're going to help you to some extent, and you get to understand where are they coming from once you're done. So basically what happens here is that once the market is actually forming like this, because there's going to be a point where the market is going to just be pushing to the upside and no longer coming back to this. But then one thing that you should know, the market will come back to touch the diagonal support. Once it breaks here, you can take your sell entries, but then take into consideration this area here where it was a higher high. You get where it was a higher high. So basically, once you take those cells, you're gonna be what? You're gonna be looking at trades. Obviously, they're gonna go into profit 100%. Okay. And then let's say for instance now you draw another one where the market actually turned. You get me? That's how you actually draw it. Now what you're gonna be having is that the market now, since you have this, as long as the market is still upside on this, it's gonna be pushing to the upside. Once it breaks here, you know that you have to take your selling entries. You get it? But then don't forget about this higher highs and higher lows. Then you can also have something like that here. Something like this again. Knowing that the market, all these inner trend lines, once the market actually breaks them, it's coming back to the diagonal support. I don't know if this actually makes sense. Okay, let's go to the chat. But then don't forget about this. Let me change my sharing. That's fine. Okay, let me just change the way I've shared this. Let me share my chat straight so you guys actually get to understand. It becomes easy for you guys, It's a good thing. Okay, fine. This thing's actually taking time to load. It's taking time to load. It's taking time to load. Okay, guys, let me just put in my new share so that we can deal with it first. And I don't know why this is actually taking so long to load. But then people will, okay, let me just see the way I'm actually trading. You know, these short terms, the different types of nuts. I'm a swing actually. I'll just put myself as a swing because I feel like that's the most appropriate what is it called? That's the most appropriate. Let's have a look at it. Just gonna put on Analyse Nasdaq because this one is already done on my way. Okay. Okay. I hope whatever that I'm gonna be saying is gonna make sense to all of you guys because I feel like this is the most important thing. So now, so just like I said, I'm a swinger. Doesn't matter. Doesn't matter. Doesn't matter. And obviously, you guys know that if like you want to be a trader that actually uses the monthly time frame as well. If you want to be a trader that actually focuses on long term, actually create a trend, go to the upside retracement from the longer movement. I actually am in there when it actually comes back. So what do I do? First thing when I get to my chart, and it works. It surely works. You can just back test and you can back test, and then you're gonna see whatever that I'm actually doing. What I do is I draw my highest point. Okay, me, I'm used to it, but then you can draw the most recent ones near price, and then as price continues moving, then you can just keep on adding your lines. But then, the weekly template. Okay, there's no weekly 10 points. There. So where the market actually turned and created a huge movement, I'm gonna draw. So yeah, 10 created a huge for like 4 weeks. I drew. And most of you guys I taught about 100 numbers, so you can just correct them and put them as 100 numbers straight. So like yeah, the market actually 10 came back down, it's a good thing. Yeah, the market actually 10 continued going to the upside. I draw my line. Simple as it. I'm not yeah, the market 10 and I'm not gonna draw that. I'm looking for huge movements where the market actually 10 created huge movements. Yeah, the market 10 created a huge movement, I drew my line. Yeah, the market actually 10 created a huge movement, I draw my line. Okay. Yeah, the market actually 10 created that assessment, I draw my line. Yeah, the market actually 10 created that assessment, I draw my line. At least, yeah, the market actually 10 went to the upside. So basically, it was previously from that demand. So I'm just going to draw my line as well. So, but then, guys, if now you can look at this, the market retracement. The market is still on an uptrend on the long term. You get momentum to continue going to the upside. Of which it was this era here when the, Nasdaq, I feel like Nasdaq here, it was sort of a crash when they just went like, so basically, this era around here, that's going to be my demand. I feel like the market, before it can actually go up and break all those highs, the previous high, it actually has to come back all the way up. That's going to be my demand. That's going to be my demand. I'm also going to draw a line inside it because now the market actually also turned that area. Okay. So I have that now there. Okay, fine. So now since I have this, I've done the weekly time frame. There's something that I can tell. There's a story that I can tell. I have a story. I have a story to tell. If you can look at this, the market was on a downtrend. 1, 9. Like basically, okay, let's just focus on 1, 2, 3, 4, 5, 6. One different candle of which that one different candle erases. I feel like for me, this era is in my area of what the market is to actually find the momentum there. You get sorry about that. Okay, sorry about that. So basically, by and you look at price, this from this it is because now we're gonna draw a trend line in that may not be a trend line. You go below that era, so you're just gonna draw this with the previous trend of the market. Below actually below this era here, of which it was the last low. So basically, it created it is this trend up, created a lower high, came back, created a lower low, created lower low, created a lower. Trying to actually let me just put it this way. It basically move. You can basically say this was one. So basically, the market now what we're gonna be doing fast move retracement to this area here because I believe there is to come back to can actually go all the way again. It is actually it needs to find actually 10 to come back to nothing that can actually make the market push all the way up and break. So yeah, that's where our five when it comes to trading indices, currency. You can tell you came back down, created an M pattern. To expect the assessment, at least to resolve know very well, they know themselves and W patterns. Those are to show you that. So you know when and it breaks the neckline, in this case it broke the neck. Okay. So what you have to do is you actually do that in assessment. Yeah, what do you actually had? But then what happened here? 8, 2 around this area here. Previously, you saw the market actually attempting to actually come there. It touched there again. We're gonna go to the date frame. You're looking for an area where the market actually turned, it went up. This area you can just label it as well. You can label it as an area of interest zone. That's a pivot zone. And the market all the pivot zone. So if you go to the daily, you can see that everything just use it from this timelines. I'm just gonna drag it all the way down. The market is still on the downtrend. Just just for it just to be part of, so that it makes sense to us. And touch can actually continue going through no stress. It doesn't break all the time. By the look of this, you can tell here the market actually went to the upside, came back, resisted, came back down, supported, went up, supported, went up, resisted, came back down, resisted, came back down. So basically you can tell that the market is actually looking for that area before it can actually come back all the way down. So since now you have this, what you can do lead you to, because now obviously now, okay, what I'm gonna do with it as well, I'm also for that it makes sense. We have the first side that touch somewhere around this area. Okay, so I'm just gonna start my chat. Continue. So now what I'm gonna be doing, I'm gonna be finding my. I'm gonna be drawing my lines on higher lows and lower. Basically, yeah, I have my on trend. Then I have my trading on. But the market actually broke the structure here with this candle. So continuation that zone there. Just to be back to reach that one right now. You get. So since you or this one here, you can just extend it, because now if you can look at this, price has been what? Price has been from a very long time. You can tell from this volume, just feel like it's too big, just decrease it a bit. So you can make your test, and then before it actually continue, just go to the H4. This was a buy if you can, because now the market actually created that goal. So we're just gonna wait for the market to actually go up. We find your buying entries, your first target, but then you saw that it actually broke to the upside. Pivot lines, remember what is that? It's a line that actually has what the market actually made. Pivot point. Recognize and focus in it actually. I also have another one there, but then this is in line with that. So I'm just gonna be also have another one here. Also have another one. Support, resistance, support next one as well. But I don't think the market would actually reach that. Which will be somewhere here around this area, of which is also in line with high. So basically now for selling opportunities. Where will I be taking my selling opportunities? I'll be taking all of this. I don't know if what I'm actually saying makes sense, but yeah, it actually does. So you actually have to give you what you're actually looking for. Then here as well, you can just draw your diagonal, which is so the market actually looking for another resistance there. So basically something like that. Like you understand it much better. I'm clear to you, because clear and came back to the neckline from the tension for actually being stagnant, feeling to break above this pivot, actually found that buying end. And as well, here you can also have another pivot point that was now you saw the market actually extended support again to the upside. Okay, you can take your buying entries all the way up there. You can add the first one that we're gonna enter. You can see this from each one. Even though it's gonna be short one, it's gonna be very short. Then you're gonna be in see that okay, the market from Monday, you can expect the market, because now it closed at that pivot point. What you can expect? It's a short movement going to the downwards before the market can actually do it, before the market can actually continue pushing to the upside. And then that's when the market is gonna hit your what? It's gonna hit your take profit. So basically you can say around this area here, around somewhere. Okay, just stop loss below. And then yes, the rest running back down. You leave it. Once it breaks, just continue with it. So yeah, he just told you guys actually makes sense. Said money has never been this easy. So yeah. Okay guys, I'll see you all on the next one. When we'll be gonna be doing analysis what is it state. Everything's just gonna be fine from there. And here as well, if like you a trader that actually you're gonna see this buying opportunity, it'll be very clear to you. Okay, on daily it's retracing to the next to draw your diagonal resistance again. Then you see the market, I think it was around 240. But I don't think that the market will actually have to come back and test it before. Sure, short chance.